Good morning, everyone. My name is Lucy Morales. I am the Vice Chair of the Education Committee. Thank you all for being here. It is my pleasure to have Mr. Chris Haun here to do a presentation, a little bit about him. Well, before that, a little housekeeping tips. Please silence your phones. And if you need to take a phone call, please go to the hallway just to be respectful to our speaker. Chris Haun is from Guild Mortgage. It is a company that has been around since 1960. His branch is located in Covina, and he is a mortgage loan originator and certified mortgage advisor. He is a native of Southern California and has lived in the San Gabriel Valley for all his life, growing up in Monterey Park and graduating from Mark Keppel High School and then USC School of Business, and now presently residing in Arcadia, where he has lived for the past 35 years. He has been in the real estate industry now for 35 years and has been an affiliate member of the WSGVR for most of that time. He has always specialized in helping first-time purchase their first home, but have had experience with every type of residential buyer and loan situation out there. Let's give a warm welcome to Chris Haun.
Thank you so much, Lucy. I totally appreciate that introduction, and I really thank you guys for coming out. It's always nice to at least have more than two people show up and have some faces to look at and people answer questions. And we're going to keep it kind of informal, so as we go through the process, if you have questions, just raise your hand and I'll try and answer it right at that moment. If not, I'll ask you to hold it till afterwards. And I may repeat the question so that people, if they watch it later on Zoom, they'll be able to see it. So I'll tell you a little more about myself and then we'll get into the presentation. But as she said, I've been doing this for a super long time. I started in 1990, so I was like a young kid at that point. No, not that young. I was 24, but I looked about 15, so it's kind of tough initially to ask people to entrust their lending to you when you look like a little kid. So it took a little bit, but 35 years later, I'm still doing it. So I'm doing something right to stay in business that long. What's been the biggest change you guys think in the last year and a half in the real estate industry? What would you say? Anyone can blurt it out or... Yeah, I think you're absolutely right. It's probably the biggest thing that I've seen probably on the real estate side in the 35 years I've been doing this. I haven't seen something bigger than that. But how many of you have been having any difficulty as a result of the change? Do you feel that it's business as usual for the most part, other than the way you got to go about finding out what the commission is? Are you all seeing that in most cases sellers are still paying commissions? I think so. I think the smartest agents are going to be telling their sellers, hey, if you want to get the maximum exposure to this property, you're going to have to offer something. Otherwise, it's not getting sold. So what I'm going to cover today is a few different things. One, I'm going to be covering just what our company has, what we do, some of the things, the tools that can help you with your buyers to get offers successfully accepted. That's the next part of the challenge. You might have a buyer ready to go, but we're still pretty much in a seller's market. I don't care what Redfin's reports say. They are totally incorrect when it comes to this marketplace here for sure. There's not only 500,000 less buyers than sellers. They're saying it's becoming a seller's market. I don't see that at all. So there's still competition on every deal, but it's much easier right now when there's competition of maybe 2 to 5 different parties on a deal than what it'll get to when rates actually do drop 1% or more. And then we see, like it was a few years ago, and you had 70 people, 50 people standing in line to make offers. That will be a tough time for folks. So you want to be totally prepared, know what you can do to make a stronger offer. You guys know more than me on that, but I want to bring up some things that we as the lender can do to help you guys secure offers and get them accepted. Probably things you've already know about, but hopefully there'll be one or two things that you'll learn. So I'm going to first just go through this partner packet, and I didn't print every single page in what I've given you, only some highlighted pages. But I'd like to before you leave, if you can give me your business cards, I will send you the PowerPoint and the full packet and other things so that you guys can reference back to it whenever you need to. So, welcome to Guild. That's the name of our company. Guild Mortgage started in 1960. They actually started as a builder down in San Diego, and then were selling so many homes, they wanted to also help people with the financing to get into them. So they've been around since 1960, one of the oldest mortgage banking institutions in the country, and one of the largest. We are one of the top 10. I think it was a year ago we were named the #1 first-time buyer lender in the country by Money Magazine. So we do a lot of first-time buyer stuff. That's what I've always specialized in. I've noticed for my career, if I help a first-time buyer, that is the biggest referral source you can get, it seems like. You close something for a first-time buyer who didn't think they could get in, who didn't have all the money to do it, got a program that helped them, all of a sudden they're telling every brother, cousin, coworker, and you get a lot of referrals. So don't shy away from that business. Yes, it's harder. Maybe there's more questions, all of that stuff, but you will be greatly rewarded if you work with first-time buyers. And that's not all I do, but I do specialize in that. So if you ever have a situation where you need that, definitely reach out to me. So I'm going to go through these slides again. Reach out and ask questions as you have them, or raise your hand and I'll call on you. So what our team offers. So all lenders offer a lot of things. They all offer similar programs. They all have access to similar programs, but I find that it's the execution of those programs and getting your client through escrow, through difficult, whether it's 15 days or 30 days. There's a lot that happens in that time frame. So I'll cover as much as possible. You probably haven't seen me wear glasses before, but it's probably better if I do. And in some of this, I wear reading glasses. So again, we've been around 60 years. We do have, as much as possible, I try and submit every file for corporate underwriting for a full corporate underwriting approval, and we'll go over some of the reasons that's super helpful. But we do have things under that stronger offers highlight. Underwriting approvals give you a stronger offer. So I'm not talking about a lender's, I pre-qualified them, I ran it through automated underwriting. Great. I can get an approval just by putting in numbers into that thing. So it's only as good as the data that you put into an automated underwriting system. So although I'll do that on a very standard easy file, my preference is also beyond that to then take it to corporate underwriting and get a full corporate underwriting approval. It's so much better if you have a signed approval by the person who's going to be signing their name on that file, because you know that it's going to go. And we'll talk about that when we get to the slides on making stronger offers, but just keep that in the back of your head. We offer a Homebuyer Express guarantee on those people that we get fully pre-approved. So with that comes a guaranteed 17-day close. There are caveats. They have to do certain things to make that happen. But 17 days, if you can tell your sellers, hey, we can close this in 17 days, that's one plus for you right there. You're going to be more likely to get your offer accepted. So along with the 17-day close, we protect the buyer's earnest money deposit up to $5,000. So if we were to say, yes, your client can do this loan, they're fully pre-approved by corporate underwriting, and we miss something and it falls out, we're going to at least cover $5,000. We'll probably end up covering more than that, but the guarantee is for $5,000 towards EMD, earnest money deposit, and up to $1,000 in inspection fees that they might have paid, appraisal, inspection reports, things like that. So that just gives your buyer more confidence going in, knowing, hey, we're pretty solid. They're guaranteeing that we're going to close this. So that's why I like to put it through corporate underwriting, and you'll see when we get to how to make stronger offers why that helps. Communication is probably the most important part of a loan officer's job. Every loan officer can know a lot. They can have all the programs, but if they're the type of loan officer who disappears when you need them, or when things are going on, they're not telling you about any issues, that's a problem. You need to have constant communication, and our systems are set up to do that. So once we're in escrow, you're getting emails almost every day. The system will generate some. Every time I touch base with a client, I go into my client retention system, CRM, Salesforce, and I put in the notes, and I'll hit update agent. It'll automatically email you guys an update on that, whatever I talk to them about, wherever we're at every stage of the process. And of course, also communicating with the listing agent. every time I have an offer going out, I ask the buyer's agent, hey, include me, CC me in that offer if you're okay with it. I would like to also chime in and reach out to that listing agent. And if I can make a phone call to them, even better. Because so often I hear on the other end, oh my gosh, nobody from the loan side called me. I appreciate this. Thanks for letting me know. And I just reiterate the strength of that file, the fact that it's fully corporate underwritten, that it's going to be a smooth transaction for them. And sometimes that, along with everything else, gets that deal into escrow. So the more I can do to help you and us as a team to make an offer happen, super important stuff. Marketing, we've got all the marketing material in the world. I have so much marketing stuff at this company, it overwhelms me at times. When I first joined, my head was spinning for weeks because I'm like, oh my gosh, how am I going to ever absorb all this stuff? So, and we do have co-marketing flyers and open house flyers and different things that we can work together with, and we'll go over some of that. Service of, I'm not going to touch base on all these things, but again, I'll send you this PowerPoint presentation after, but we're already 20 minutes in and, barely starting. So we offer great service. And again, that's mostly communication, but making the phone calls, keeping the listing side aware of what's going on, but keeping you and your buyers fully aware of what's happening throughout the transaction. We talked about communication already. Loans for every situation. We have pretty much loans for everything. That's residential, at least. I don't do commercial, so it's 1 to 4 residential property. So whether it's a condo, a mobile home, even now, we just started recently offering that. People can't afford even a condo nowadays in some markets, so it's still commission. Sell them a mobile home. Some of them look entirely like a home once you're inside. It's just maybe you step outside and you go, oh, I am in a mobile home. But there is financing for that with as little as 5% down to like 600 credit scores with 5%. And you're able to finance closing costs into the deal, or most of them, not all of them, but a good chunk of your closing costs on a mobile home loan. So keep that in mind. So we do have loans for every situation. Owner-occupied investment, your bank statement programs where someone doesn't qualify because their self-employed tax return shows nothing. Or your investor who can't do it with taxes, but they're putting a big enough down where the property can debt coverage itself. We have those as well. So keep that in mind. From lead to close. So truly from the time you give me a name, it's going immediately into my CRM system, my client retention model. Yes. Oh, and there's a handout up here for you. The 10,000 assistance we have almost every program. And if we don't, I can get corporate to get the programs approved. I haven't had a chance to use that yet, but no client has written it in or asked me about it. But yeah, definitely it's something that I think we do have. But yeah, a lot of first-time buyer programs. Again, that's my main focus. So if there's one out there, I'll know about it at least. So lead follow-up, they go into my system. I know exactly which agent referred me who. I can go into your name as a realtor later and pull up every referral you've ever given me. It'll be in my system, what I talked to them about. So you won't lose track of your buyers. Even if you're not keeping track of them, I will, and make sure that when they're doing something, you're going to know about it. We do online applications. Now it's a very modern age of electronic stuff, and people don't even want to talk to you hardly sometimes. And it's like, oh, here's a link, go in and you complete the application. And for others that don't have that ability or don't like that, of course, I can do it over the phone, meet them in person, whatever works. We talked about the pre-approval difference over a pre-qualification. That's when the actual underwriter has gotten involved. It's gone to the corporate office for full credit approval, meaning the underwriter reviews the income, the underwriter reviews the assets, the underwriter reviews everything other than the property info because you don't have a property yet. But that way, once you do get into escrow, the only thing we're really concerned with is the property, getting it to appraise, making sure that the property meets all the standards, and getting title paperwork. That's really about it. So it can go really quick when that's the case. So keep that in mind. Fast track, number 4, your client may qualify for fast track. I haven't had too many that do. Their job has to be in the work number system. They have to provide it all the documents so that the automated underwriting system will do a verification of all that stuff and then issue you a fast track approval. That can even close your transaction quicker. Email updates, we talked about that a little bit throughout the process. The system generates emails to you as Docs have gone out. The CD's just been generated. You're getting an email. Docs have been drawn. You're getting an email. Your client has funded. You're getting an email on that. So you're not having to wonder what's going on. And I'm so on top of it. You're going to get calls throughout the thing and know at every step of the process what's happening. E-close, we do have e-close, other than, certain documents still need to be live signed, but the majority of them can be electronically signed, which for many clients makes it so much easier. They're not having to sign 150 pages by hand, which I used to do all my signings in my office with a notary. And oh my gosh, there's an hour and a half of just going through pages that way. Electronic signing is kind of nice. We have things like HomeBot. I don't know if any of you have heard of HomeBot. It's something we won't cover much today, but you can always call me and ask me about it. It's another one of these client retention systems that keeps the homeowner or future homeowner fully aware of what's going on with the market and their equity primarily. And it's one of these systems that has built-in algorithms that are going to notify me, hey, this guy's been looking at new homes a lot. And I can call you and go, you might want to call them. It seems like they're going to be moving shortly. Or they're looking at their value every day and you're knowing, well, they're thinking of something. So it's just something that can then make you make a phone call and keep you in touch. Yes. I can add you on as a freemium account, meaning you don't pay anything for it, but it only gives you up to 25 clients to put into it. After that, I think the cost is $25 a month to go to as many as 500 or something. So it's relatively inexpensive, but it's a great tool. You'll get a weekly email that says these 18 people have been looking at something, reviewing their digest, checking it out. And each month they're getting a report telling them, this is how your equity's grown. If they put in their loan information or it came directly from us doing a loan, they're going to have all that data in there. So it's just going to be reiterating to them all the time, hey, this is your equity position. You've gained a lot over the last few years. Maybe there's something you want to do with that. People accumulate a lot of debt these days over the last few years as income hasn't been coming in the same. People put crazy things on charge cards. I've put stuff on charge cards I would have never put on charge cards in the past. But all that will get notifications. Sounds like this guy's looking into a debt consolidation or whatever the case. So HomeBot is great. Reach out to me if you're interested in that. Yeah, for sure. For sure. And we have like a client for life system, especially if they're a loan that we close and they're in our system. My system will notify me when a good time for them to refinance. It's not even going to tell me to reach out to them unless it's beneficial to the client. So we're constantly building new things into our system to make it just smoother and more efficient for everyone. This slide, I'm kind of just going to skip over. It just, again, talks about most of the things that we've talked about. I'll briefly cover it. So first, you start with pre-approval. We get your buyer fully pre-approved, so you know what they can do and what they can go out and write an offer on and get accepted. Once they get a contract, we set up the file and turn it in for disclosure process, which usually we get out in the first 1 to 2 days, ordering the appraisal, processors taking over the file and actually putting it through the system. They will then set it up for the underwriting department, and that's anywhere between 1 to 2 weeks. But if we've done a pre-approval already, usually it's going in within the first couple of days just to reapprove the property, the borrower now with the property. And of course, then when the appraisal comes in, we'll update the file with that. After all the approval is done, then we get to the stage of issuing a CD, which is issuing a closing disclosure that just shows your client the fees again, so they know after they've gotten approved, nothing has changed. It's still within the realm of what they are initially looking at. The CD is time sensitive, so I always call my client or text them immediately upon that going out to let them know, sign it today. 72 hours have to pass before they can sign loan docs. So I make sure that they're aware it's in their inbox. Then after that, we're ordering loan docs. Loan docs come out within a couple hours usually. They go to escrow. Once they've signed them, our company issues clear to close before we get loan docs. So we're going to make sure everything is in before we even issue those docs. And it makes this closing so smooth. Never been a place where it's a smoother closing. I know that once they've signed docs, I can fund that same day if it was early in the morning and before a cutoff time. So it's great systems involved, and I really love it. So appraisal waiver is a system generated condition that comes out of either Fannie Mae's desktop underwriter or Freddie Mac's loan prospector systems. Usually, you're going to need a large down payment. The property, it's getting harder to do because the property can't be over $1 million in value to generate a appraisal waiver. So if it were a refi and you didn't need all that value, I'd be putting in $999,000, just keeping it under that million to see if I could get the waiver. But on a purchase, it's going to be at whatever price you're at. So that's one of the biggest things that makes it harder for our marketplace here, I would say. So big down payment, high credit scores. What else? Single family owner occupied, either a home, condo, or a townhome. I don't think it's going to do it on units, things like that. So it has to be like your super strong file and at least 20+% down in most cases. You won't get a waiver on 5% down or 10% down. Yes. Oh, yeah. Lots of times. More so, probably the most I ever saw appraisal waivers was during the COVID time. And there were a lot of refis going on because rates had dropped under 3%. There was a ton of files getting an appraisal waiver. So, but on purchases, I've only had only a couple. And a lot of time my clients are first-time buyers, so they're not putting a big enough town to get that waiver. Open house flyers, we have them if you ever need them for your open houses. We can sync them up with the MLS information, and it's very easy for me to create. So let me know in advance if you need that. Just need a couple days. These are just some of the loans that we have available. Conventional, government, your VA and FHA loans, jumbo stuff, of course, as well. And we're getting into a market where jumbo is actually one of the best price loans out there. It's also the most pain in the neck to do and hardest for the client to go through. I recently had an experience where the client, I had been pre-approving them under high balance for all that time, but somehow the system showed them they could do a jumbo and the rate was 0.5% better, so more than 0.5% better than a high balance conforming. But it was so painful to go through. They want a ton of things on the jumbo. They want to see at least usually 9 to 12 months of reserves. Your debt ratio can't exceed 43%. If there's tax returns on a file and you're not even using them, they're going to ask you to verify those tax returns. So a lot of extra steps. So just keep that in mind if you have a jumbo borrower. We have extended rate lock options if you ever needed that. Like that's mostly for builder deals, and I don't do a lot of those. And then alternative programs, we have 0 down products, we have 1% down, we have a lender funded temporary buy down of 1 year. So if have a client who's very rate sensitive and they don't like rates at 7% or 7.25%, whatever it's at, we can do a temporary 1 year buy down and it'll be 1% below that for the first year. And we pay that cost. We pay that subsidy, put it into an escrow account, and each month pay the difference between, let's say, 7 and 6%. Just take that and put it in and subsidize their payments for a full year. So it's a great tool in this market where we know rates are high, but figure they're going to come down at some point. Today was great news on the inflation side, and the market rallied this morning. So we saw less jobs created. That's the side of the economy that they want to now see for the feds to get more comfortable about reducing rates. Inflation has gotten very much under control. The only thing that's probably keeping that to be an issue right now is uncertainty of tariffs. They don't know in some cases how that's going to work out. It seems like it's been working out pretty well so far, but the uncertainty part of how it's going to work, and people are suffering. There's people losing jobs. There is other things coming up as a result of that, but that's keeping the bond market a little bit sketchy. They don't know which way to go. So they're going to be more conservative than aggressive. So we haven't seen a lot of rate reductions recently, but today's news on the lowest job creation, I think in the last few years, that's what they want to see. They want to see a slowdown in the economy for the feds to do something at least. So keep that in mind. Home buyer protection. This is what I was telling you about and kind of covered it already. So just take a look. You got up to $5,000 in earnest money deposit protection, $1,000 in inspection and appraisal fee protection if we were to approve that loan by corporate underwriting and it didn't go. So they're going to make sure that deal's going to go. I've never had one come where we're having to pay that because it was corporate underwriters don't go back on what they're approving. So the 17-day guaranteed close. We do have a payment protection program as well, which means that we're going to do if we do a purchase for them today, we're going to do a no lender fee refinance for them when the time comes. So it doesn't waive all the fees, but it waives the lender fees. So a couple $1,000 they don't end up having to pay. So that's another good thing to tell your clients, hey, this lender will also protect you when rates come down. You're going to have the ability to get a lower rate and not have to pay all lender fees. We have a lock and shop program as well, where you can lock a loan for up to 120 days. I haven't used it because it requires an upfront fee. You still have to get into escrow within a certain period of time. And in a market where I think rates are more likely to over time come down than go up, I wouldn't suggest that program, but we have it. That's all the fine print on how we do that 17-day close and stuff. So there is fine print to it. Yes. Yeah. So I have HELOCs available. I truly don't offer them myself. I just feel like for a true HELOC, which is an adjustable rate tied to prime that has a 10-year draw period, and then you pay it back over the whatever's left, 20 years usually at the end. Banks will offer clients that with no cost at all. I've got to charge all normal fees on a transaction like that. So I just don't feel it's the best way to help that client. So I'll tell them go to their bank for a HELOC. But instead, I will do a HE loan all day long, which is a fixed rate closed end second. I also have had personal experience with HELOCs that I wasn't very happy with because of how they adjust, how they're interest only usually during the first 10 years. It's very easy to pay interest only and get into that habit. And you get to the end of 10 years, and your balance hasn't gone down a penny. And then you're now repaying it back over the remaining 20 years. You can get into trouble with that. So I like the fixed rate closed end second, and I do those a lot. HELOCs, I'll typically refer them. Yes. On second mortgages like that. So anytime you're in second position, rates are considerably higher. They're mostly in the 8s and up as high as the 10s, depending on if it's, lower credit scores. Equity position weighs into it a lot, but most of them that I've been doing recently have been probably low 8s right now, which is much better than a 28% credit card, that you can't write off typically. So that's a good way to go. This is just a quick qualification guide. It should be in your packet. And this just shows you, like, we'll go down to a 620 credit score on conventional, as low as 540 on FHA and VA. They're tougher to do for sure. If you're under 600, a government loan is tougher to do. It becomes a manual underwrite. You need 10% down. So it is available, but not often done. Of course, we have your Fannie Mae and Freddie Mac, all of their programs, USDA even. And this form will also tell you how long you've got to wait on major credit items. So take a look at that when you have time. USDA loans are for more rural properties that are out in kind of a rural area that have acreage to them. It's a government insured loan as well. It's like an FHA loan, but you can do zero down on a USDA. I just haven't had any clients buying properties where they could be done. So they're going to be more rural area, have some acreage tied to it. No farming, but more of a rural market for USDA. So probably in other states, you see a lot more of them. Yes. Say that again. So free and clear property. First mortgage cash out would be the best way to go for that.
Okay.
Yeah. First mortgage position rates are going to be much lower than the second mortgage, as we talked about. It's a first lien, so there's nothing else behind it. So it's just going to be a new first mortgage, just like when they purchased. Maybe different tax benefits, but yeah, that would be the way to go. Outreach. These are just some other things that I won't cover right now because we're running tight on time. This is just some of the other things we do at closing. I always do send a nice closing gift to the client. One of my recent companies that I've been going to is a company called Sackcloth and Ashes. I really like the sentiment of this company because it's a beautiful blanket that I purchased. It comes in a nice box with Guild Mortgage on it, and it's a box that has some suggestions on what they could do to fill it up with things to donate to the homeless shelter. And every time I purchase a blanket for a client, uh, the company sends a blanket to the closest homeless shelter to that buyer's zip code. So it kind of given back as well, but they're beautiful blankets and the clients really love them. So always include a closing gift. I always keep in touch with the clients afterwards. Sometimes I find out the agent hasn't talked to the client for 4 years, but I've been talking to them every year. So I'll keep track if you haven't. So I'll reach them back out to you if you're not doing that. But I know good agents typically will keep very close track. We have things like Mobility RE. I know most of you have companies that have some kind of software that will allow you to search for properties for your clients. This is one that you can have and work with, and it'll show only your data. So instead of them looking at Redfin or Zillow or something else online and finding some other realtor trying to take your client away. So that's something available to you as well. This is just a form that's in your packet too on things that you should ask your lender if you're working with a different lender than myself. Just things like, do they specialize in home loans or are they doing some other job as well? How long have they been financing homes? Are their pre-approvals underwritten? I won't cover everything, but read that when you have time. It's good information and things that you would want your lender to be doing if it's not me, anyone else. I'm available on weekends. You will find me that most of the time on weekends in the morning, I'm surfing. Somewhere between 8 o'clock and 10 usually, but I'm back at home after that and trying to help people. I'll skip this one. If clients' loans need a rescue, that's nothing for this really. We're big on giving too. So Gil does a lot of outreach with different companies and we give back. So there's always drives at our company of, hey, this is going on. If you'd like to donate, we'll match it and things like that. So just important things that I think companies in this day and age need to do aside from just doing what they do. And we've got your back. So we're here to help you in any way that we can to make your transactions smoother, better. I've got a lot of experience. I know how to talk to clients to make them feel comfortable. That's another huge thing. You want your clients to be able to talk to a lender that they don't call you back and go, why'd you send me that guy? I don't even understand what he's saying. He's talking too fast. I don't understand what he's saying. So I try and make it one of my top priorities to communicate very clearly and smoothly and speak at their level and get them comfortable with me. Luckily, it's very easy for me to do that. So that's all I'm going to cover on some of the things that we do. There's a million other things, but we have limited time. So I want to go on now to what you guys can do in this post-NAR world to make your relationship with clients stronger, to get them to sign that buyer broker agreement, and to get your offers accepted. So I'm going to switch. Awesome. Just side. Okay. So that's the QR code to my website if you want to take a picture. I think it's on one of these pages as well. But no need to focus on that right now. So 10 winning strategies for offers. These are 10. I didn't come up with these 10, but these are 10 things that I've seen on transactions that have really helped. Some of them I would never recommend, but I'll still talk about them. And just things I think would be helpful for you as an agent as you're competing in a heavily still seller's market in my eyes to get your buyer's offers accepted. So we all know this one, the first one, offering over the ask price. I haven't seen on any of my personal transactions recently anything going in under full list price. At least here in the San Gabriel Valley, it's going higher usually, unless it's been sitting around for a long time and there's a reason for it or whatever. But if it's a priced right property, usually that first week that it gets listed and had a first or second open house, if it's priced right, it's going into escrow. So you're not necessarily going to have the ability to have your client go, oh, it's 899,000. Let's go 850. I think we can do this. You have to be then strong with your clients and say, hey, I know you would love to get it for 850. I would love you to get it for 850 also, but The reality of the market is that that's not going to happen right now. There's 6 other people looking at this property. We have to come in strong. So typically that's one of the easiest ones, going over ask price. Of course, you then have to make sure that your clients have enough money to cover should it not appraise. And we'll talk about that more in a second. But usually 10,000, 20, even more. I've had clients in this market that is still going up in value. Appraisers are able to bring it in. So I haven't had any appraisal problems other than maybe one. And we knew up front that it was probably going to be a stretch on that one. So that's one tactic that you can use. So you want to work with a good lender, so your client's fully prepared, knows all those options up front, so that when they write something, they'll know if they can go higher in price or not. If you're maxed out at 800 and you're looking at a property for 800, that's going to be a tougher one because you're probably going to have to go to 810, 815, 820, maybe have to relook at that client and figure out how can we do that, or be realistic with that client and go, hey, 800 is your top. So let's start looking at homes at the 750 range that might have to bid up to that. So just keep that in mind. Larger down payment benefit, of course. You know, you have clients that have 20, 30, 40, 50% down. That's usually a stronger offer, right? The sellers like to see the big down payment, even though it could be a fully approved loan. They just feel psychologically more comfortable. So when you have that ability, of course, that's a great one. I have had agents also who have clients that they have set up the offer, wrote the contract, said, hey, we're going 20% down. And we get into escrow and they're like, they're only going 15. If they're approved to do so, the sellers typically don't care if it closes. It's just if it doesn't close, then you're going to have a problem. You're going to have to get it to that 20% to make it work. But I've never had a seller go, oh, we saw that you put into escrow, you're only going 15% down now. They don't even know that till the end. So as long as everything's approved, flowing smoothly, that is a tactic I've seen agents use, and it's beneficial. Larger earnest money deposit. Well, I don't think you're going to get away with much less than putting at least 3% these days. I see 3% being the most common amount probably on offers. I've had deals get in to escrow with as little as $500, but it was a different market, a different area, and there was more control with that seller. It's not going to be common. So of course, that's another tactic that can help you. So knowing what your client has available, having the discussions, your lender having the discussions of, hey, you've got a 401k, you might want to put a little bigger money, earnest money deposit. You can pay it back after if it's within 90 days usually and not have a tax consequence, but different ways that maybe you put a little larger earnest money deposit, but your client's not going to want to do that unless they're totally secure on the loan. So as we talked about before, another reason to do the full pre-approval. If they've got a guarantee on their earnest money up to 5,000 and the inspections up to 1,000, and they know it can close in as little as 17 days, they're going to be a lot more likely to be comfortable with a bigger earnest money deposit. Waiving inspections. This is one of the ones that I don't recommend. But there are times where your client is so in love with that property, the seller's telling him, hey, we're not doing anything. Do your inspection. We're not going to pay for a thing. Sometimes waiving that, if your client really wants it, you just have to say, hey, you got to do your own due diligence, figure it out, because we're going in naked on this one. There's, we're not checking it out. So definitely not one that I would be suggesting to my clients, but it is one tactic as well. Benefit of fast closing is a big one. So back to what I spoke about before, if we have a full corporate underwriting approval, the underwriters already reviewed the client's income, documents, job, assets. Only thing they haven't seen is the appraisal yet. Appraisals get done quick in this market. It's not a busy market. So if I order appraisal today, being Wednesday, I could have it as early as Monday for sure. Sometimes a little longer, but typically about 7 days. So if you needed to do a quicker close, you could definitely do that. And that may help your offer to get accepted as well. So don't rule that out. But again, you only do that for a client who's fully pre-approved. If the lender hasn't done any of those processes yet, and you say, hey, we'll close in 15 days, 21 days, 17 days, and they haven't even done an underwriting approval, you're going to be stressing out and white knuckling it through that. So try not to do that. Offers with no contingencies, of course, that's another big one. I've seen offers of my clients get accepted because the agent was very aggressive, but they wouldn't have been that aggressive without the guarantee of full corporate underwriting. So again, not something I would suggest. Even me doing this for 35 years and knowing how to work with clients and figure out files, I'm still not comfortable saying, hey, just remove the loan contingency. Don't worry about it if I'm the one who did the approval. As good as I am, I would prefer to have a signed corporate underwriting approval before I'm going to suggest that to a client. But it's a huge one because if you're competing with 3 other people and you're the only one saying, hey, well, I'll waive my loan contingency, maybe keep a couple to keep you safe, appraisal or your inspection still. But if you wanted to be more aggressive on your offer and do something that may get it accepted more easily, keep that in mind. Appraisal gap. So, oh, yes, go ahead. Well, what I've seen is situations where they might waive the loan contingency because of being fully corporate underwriting approved, and then they'll go ahead and waive the appraisal contingency because they're going to have me rush that appraisal and get it in within the same 7 days that you're doing that inspection so that we get the value back and know, okay, it's solid before you remove your inspection contingency, but you're using the inspection contingency to try and, so that works. The only thing I will say about that is just because you get the appraisal in and the value came in and it hit my email doesn't mean that 100% that the underwriter is going to accept that value because they're still going to review the appraisal. So you also want to have enough time to not only get the appraisal in, but have it signed off by the underwriter would be ideal. Because then you know, okay, they checked it. I had one the other day where it stressed me out because I didn't have those contingency issues or anything, but the client's value came in and everything looked good to me on that appraisal. But underwriting reviewed the appraisal and they're like, well, we need that appraiser to go out and get one more comparable sale of a 2-bedroom comp instead and bracket the price. And I'm like, oh my gosh, I already told the clients that the value is fine. It ended up being fine. The appraiser got us what we needed exactly, but it just reminded me that, hey, even though I have the appraisal in hand, the underwriter needs to review that before you can comfortably say you're good to go. So great question. It's truly case by case. So if you've got a super solid client that's been corporate underwriting approved, I've had clients waive the loan contingency. I'm fine with that because I know it's going to be fine. They might keep the appraisal in there or one of the others. They'll always keep the inspection most of the time. And nowadays, insurance, a whole nother issue. You get everything ready to go and find that you're having trouble getting insurance. You'll get insurance in almost every case, but it's a painful process these days. I've had more clients than before have to go to Fair Plan than ever before, which is inferior coverage. I mean, it'll close it and it's half the time it's cheaper, but that's because it's not covering as much. So usually to get it even close to a standard policy, you got to get that plus a duplicate coverage policy that covers all those other things that the Fair Plan is not. And Fair Plan works a little bit differently. So that's the one that scares me in today's market is the insurance piece of it. But yeah, so ideally I say 7 to 10 days on appraisal, loan contingency. If they haven't gone to corporate underwriting, I'll tell them usually 14 days would be great. We don't need the 17 or whatever. Closing typically in as little as 21 to 24 days, even if it wasn't fully approved before, but much smoother and easier if you already have corporate underwriting approval. And much less stressful for me. If I have a file that's been corporate underwriting approval, I don't get the gray hairs wondering, oh, shoot, is the underwriter going to be fine with everything that is going in there? So great questions. But appraisal gap, you have to have those conversations with the client. I just had the conversation with a transaction I closed yesterday, about 3 weeks ago or 4 weeks ago. Yeah, it was I think it closed in 25 days. But about 3.5 weeks ago, the client was like, hey, we're going in at this price, but it might not appraise. The dad was the realtor and he's like, it might not appraise. I looked at the comps and I felt like pretty solidly it should be fine. But that's actually the file that came in at the value, but then I was stressed out because the underwriter had added that other condition of getting another comp. So, but it all worked out. But we had the conversation about if it gapped on, price didn't appraise or the value didn't come in at what the price was, what could we do? And we looked at, instead of then going with initially 10% down, they could still be approved at as little as 5% down. They'd have PMI and other things, but we had strategies to address that if that came up. So you want to have a strategy if you're going to be, having a situation where value's not quite there. Free leaseback. This is another beneficial one. I've seen clients accept an offer because they're like, hey, the sellers need an extra couple of weeks to do some things and get ready for the place they're moving into. Would you do a rent back and charge nothing or whatever? Most of the time they're going to get a per diem for it. But having a lease back might be the one key that if you didn't ask the questions to the seller, you wouldn't even know that's the case. But that could have been the one thing that made them take your offer over another one, even if the price was better, because it wouldn't give the seller time to do what they needed to do. So it's an important one that I don't think people think about too much. And this is, I think, the final one of the 10. This one I've seen work. It's not one that I'm super crazy about either, because it pretty much says, hey, we're going to take this thing no matter what. But so if you do an escalation clause where you're saying, my buyer's willing to pay $10,000 over the highest offer up to a max of a certain amount. So one, got to make sure they're qualified to that. Secondly, that they're comfortable with that hit. That actually happened on a house that I had sold, where the offer that was accepted between my brother, sister, and I was one that had an escalation clause, and they were willing to go $10,000 over the highest offer up to a max price. They didn't end up having to, because theirs was the highest offer anyway. But two of them came in with an escalation clause saying that. So again, not one that I'm crazy about, but if you have a client that's just so in love with that property that they're going to be upset with you if they don't get it, it might be something in your bag of tricks to pull out if necessary. So I think that's the last one. Oh, and this is the last one. And this one I don't suggest either, but contributing to a seller's closing costs. Yeah, I don't know. I mean, boy, if they were offering to pay my closing costs, I'd be like, pay away. I'm happy with you doing that. But I haven't seen that one too often, because also your buyers only have a certain amount of money to deal with. So, if they're going to be paying some closing costs for the seller too, like their escrow fee or something, they have to be pretty desperate to get that property. So one that I typically don't suggest doing, but it is another tactic of the 10 on this thing. And anyone who wants this PowerPoint, I can send it to you as well. I just need to get your contact information. But all of this being said is just to let you know that you need to team up with a strong lender that has these tools in place. That, it's a different world now with this NAR settlement. Have to do things like get that signed buyer broker agreement before you're showing these properties. And some people are still uncomfortable with that. So, if you were to ask, like, what is your value proposition as an agent for clients? I'm sure everyone's going to say, oh, well, I know the markets. I know how to negotiate. What else? I'm a strong negotiator. Those are just a couple things, but you start thinking, what other things can I bring to the table in my presentation to these buyers? Like you do a listing presentation, right? You're going to have all your things outlined that you can do as a company or as an individual that's going to help them to sell that property. So on the buyer side, same sort of thing. You're going to have to put together some kind of presentation that shows them your value and what you can do. Because some buyers think, I found the property myself on Redfin. They just wrote the offer. I don't even know why I'm paying that guy. That's the easiest part, is finding the property. It's then getting that property to be in contract with you, which is the hard part, and to do a good job at that. And then your job just practically starts once you go into escrow. That's when all the true grit gets involved, the true value of a professional agent is involved. Because when things start to blow up, or, just for an example, and this wasn't a blow up, but I had a client not too many months ago who was buying a property. They went into escrow. They didn't ask for any things, repairs, but they got an inspection done, right? Oh, that's another thing I would say. If you can avoid asking up front for the seller to fix something or pay for something, wait till you're in escrow. It's a lot easier to negotiate a repair or a credit for something once you're in escrow. If you're asking for it up front, you may not ever get into escrow. But if you're in escrow already, everything's going really smooth, you do an inspection report and go, we'd like to get $5,000 to help us cover some of these things and do it as a credit towards your closing costs so it doesn't affect the loan. You're going to be in so much better shape because you're in escrow already. The seller's more likely to work with you when they wouldn't have even considered that prior to getting into escrow. So that's one suggestion. Don't ask for it up front. Maybe wait. If it's something that can wait. If it's a major thing, of course, you got to protect your client and make sure you ask for it. But just definitely some smart things you can do and working with a good team. So I was starting to get to the point of, besides value, besides knowing how to negotiate, besides I know this neighborhood better than anyone, you got to have other things. So what are some of those things? Well, I have a whole network of people that I work with. I have this lender that can get you fully pre-approved so that you're not having to worry about your money. That'll get you a quicker close. All these different things that you have to explain, or maybe it's not something that you do, but it's something that you provide to your clients as an added value to make sure that their transaction is going to go smooth. I have all these contractors, you could say another one. I know all these different people who do work. So once you're ready to do the work, you have them. I've got a great inspection company, a great title company, great escrow officers, all those things that are part of your extension of yourself in representing your client in the best way possible. So having teams, whether it be me as a lender or some of these other ancillary services, a good inspection company, no need for an appraiser knowledge because that's all independent, but those are important things that you can now bring to the table when you're meeting with those buyers for the very first time and explaining to them other than just, hey, I know the market, I can negotiate. Every realtor is going to say those two for sure. So anyway, I'm not a realtor. I was licensed for probably 30 years, but I let my license. I've never used it once. I just had it because when I first started in the business, you needed one. But I let it go. So I've never used it, but so I'm not one to do your job, but I see enough transactions and work on enough and know which ones get accepted and which ones don't. And I see the agents that do certain things on those that get those offers accepted over someone else. And we're not in a buyer's market. If it was a buyer's market and you could go to 10 different properties and offer whatever, get the seller to agree to whatever, that's a whole different story. But in a seller's market, which it's been for, gosh, I don't know how long now, I haven't seen a buyer's market since probably over 20 years, I would think. It's been somewhat seller in California all this time. And it's not going away. Prices aren't going down. I mean, you might have some slight adjustments in certain marketplaces, but until, in California at least, we start to build a lot more property, we're behind 10, 15 years on the number of homes needed to sustain the number of potential buyers. So it's going to keep being competitive. So those buyers that tell you, oh, we're waiting because the market's going to crash. I heard Cardone say this or that on the reel. They're just selling you something. So always keep that in mind. But it is a buyer's market. So you got to be strong. You got to be strong with your buyers. You're the boss. You're the professional. So even though a client might be telling you this thing each time, there becomes a point where you have to say, hey, I know you want to do that, but we've lost the last 5 of them. Let me direct you on some better choices to make. And they'll go, wow, you're right. We got the offer accepted. And so the things I talked about today are just some of the strategies. And again, working with a good, solid team. I've closed thousands of transactions over 35 years, run across a million things. You run across something new on 35 years. I still learn something new every day in this business. So it's just one of those learning curve things. So hopefully you learned a little bit today. It's just to wet your whistle and give you a little idea of what some of the things we do. But reach out to me. My business cards are there. My website is on the little QR code on those flyers you've got. There's probably more food, so feel free to get more of that. But I'll just end with questions if anyone has any questions.
Are you allowed to, oh, sorry, Julia, you have a question?
Oh, question about, you said underwriting up, that one, so how long we can get it, that one? As a first time buyer, we need some, offer, we need to give the pre-approved letter immediately, so you also have the pre-approved letter, right?
Oh, yeah, I can do all
So
that.
how soon can get it?
If I'm just doing the pre-approval, I can do it the same day I gather the information from the
So-
client.
So you need to steal some file from the buyers. right?
So I need to have a completed loan application, all
Oh.
the supporting documentation I ask for. So if it's a employed person and I need a month of pay stubs and because I get a lot of overtime, I need the year-end pay stubs for each of the last 2 years, all their assets, everything. I can run it through automated underwriting that day and issue a pre-approval letter.
Mhm.
However, that wouldn't be the underwriting pre-approval. I still need a few days because probably to get it fully underwritten, 3 to 5 days, because I've got to turn it into my processors. They have to order a couple things. They have to prepare it and put it in line to the underwriting department, who then has to go through their other files and get to your file, issue corporate underwriting approval. Once it's in line, it's 24 to 48 hours.
Okay,
But you still need enough time. So I would never suggest like, hey, you just met the client today, trying to get them pre-approved today and get into escrow same day.
okay,
You need to give the lender enough time, or if you don't, that's when problems happen. When someone will miss something, if they're rushing too fast or trying to do too quickly. So usually having at least a week of time to get all that done, get a full corporate approval. And it depends on the client too. How quickly do they get you things? If they're the client that gets it to you the minute you ask, it's easy, very easy.
so anyway, just let them pre-preparation for all the documents 1 week. Then they can
That-
do online application, right? They
Yeah,
can do
that's the
online
fastest
application.
way usually. Yeah. And I'll get notification as soon as it's done. I'll get a notice as your client just completed their application, go in and review it.
And usually this kind of a pre-approved letter, this can stay like 3 months inactive. right?
Yeah.
Okay.
As long as their situation doesn't change dramatically, like, yeah, if they lose their job, that pre-approval's out the window. If they go out and buy a brand new Maserati or shoot, even a brand new Tesla these days, I don't know. All the car payments I see on people's credit reports, they're not $300 anymore. They're $800, $900, $1,000 now, $1,200. I'm like, is that a car payment? Oh my gosh, should have bought that after. But yeah, so good question. But yeah, the more prepared you are in advance, the better it's going to be for your client and everyone else.
Okay, and I saw your the file and said like the credit score only 600 something, then still they can get a 3% down payment. That is true.
You can, not every file will approve that way though. Those are the tougher ones. So although allowability is down to a 620 credit score with as little as 3%, conventional, everything else will have to be super strong, like low debt ratios, good job stability, high credit scores, well, that one didn't have a high credit score. So I have seen automated underwriting not approve those.
Oh.
You know, they got only 3%. The job's not super strong. I'll run it through numerous ways and can't get them to approve for whatever reason. So although it's an allowable product, could be tougher. Definitely. Yeah, I haven't seen too many at 620 get approved with 3% down. The other things that you have are, if you've got a 620 credit score, your PMI cost is going to be really high. And if you're doing only 3% down, it's going to be over 1%. So that's going to be an added cost. It layers onto the debt ratio. Now you got a higher debt ratio. So the lower scores are tough in many ways. One, may not approve, even though the program will allow for it, still has to approve through the system. Then the underwriter has to approve it. So just because a program exists does not mean that in every case it'll be approved. So it'll still be based on the overall merits of that file.
So last question is, so you also help the buyer, first-time buyer to apply for the other government assistance program,
yeah,
right?
yeah.
At the same time, okay.
If I know it's a first-time buyer and they only have a limited amount of money,
Right.
I'm pre-approving them based on using a program that's going to help address those things like down payment money, closing costs, or it has a better than market interest rate or whatever it is. Yep.
No, I just want to know what's the rate in the markets right now, and also what kind of I heard there is a 5-year, 7-year program with the lowest rate in the market. So
Yeah. So in regard to average rates, you're probably now in the upper sixes, low sevens, and some of it depends on how big the loan amount is. There's a difference between conforming loan amount, which is max loan of 806,500 in LA County, versus a high balance loan, which is 1,247,000, I think, 751 or something like that. So between those two, there's a big rate difference of 1/4 to 3/8%. So if they're under 806, rate's going to be better. But typically somewhere between 6.8 to 7.25 right now. I've seen them as low sixes for a couple days, and then something comes out that sends the market funny. So I'm hoping this job report that came out today is a big precursor to the Feds loosening up a little bit, and not so much the Feds even as much as bond investors, because rates really move based on what is happening in the U.S. Treasury Department sale of bonds and mortgage-backed security sales. Almost direct correlation with mortgage-backed security sales. So people haven't been willing to invest in mortgage-backed securities, which would then bring down rates because they're still afraid of inflation. If someone's investing in a bond, which is a fixed investment, they're earning a certain return over a long period of time, they don't want their dollar to be worth less, because then that investment is not maximized, it's not making as much money. So they hate inflation. So the bond market and interest rates are driven more than anything else by inflation and inflation reports. And inflation reports have gotten very good. It's between 2 and 3% now, and they want to target it down to 2%. It's closer to 3, but it's approaching that. So the last piece of the puzzle that would make the Fed's happy to do something, and probably bond investors as well, is to see a slowdown in jobs. Less new jobs created and a little more unemployment. We don't like to see it, but unfortunately I do. I'm in a world where I want bad economy so my clients can get some decent rates and I could do some loans. But yeah, most people don't think that way. But any other questions? Yes.
Hi, Chris. Do you foresee the lending industry will incorporate buyer's agent compensation to be incorporated in the loan amount?
So it currently is not. It's not one of those items that you can finance into your loan, and I don't think it ever will be. Lenders are about risk, so if they're now just financing more than they were before and going to loan to values even over 95% or 97% of the value, they're going to be like, oh, that's not a good risk model for us to make that loan. So I don't see that happening. There are ways to do it. So what can you do? Your client has got to pay you, let's say. The seller's not willing to pay. Typically, I'm not seeing the 3 and 3.5% anymore as much. I'm seeing, especially in San Gabriel Valley, most of the time now I'm seeing like between 2 and 2.5%, it seems like. So you can finance that still, but differently. You now got to put it into the price, like it was before. When a seller had a price listed and they're paying 2.5%, they'd worked it into that price. So you're doing the same thing now. So maybe it's listed for 800, but you know they need to pay your, let's say 2% just for an easy figure, and need to pay 16,000 to you. Maybe you're going to offer 816 or 820 on that one and ask them to pay it then. Then it's going to net the seller the same thing. They'll be like, okay. But of course, they have to be comfortable that it will appraise. They have to be comfortable to know that, it's not going to become a problem because of value or something like that. But, and maybe it's just a portion. Maybe you're not putting all of it into the price. Maybe they can pay some of it from their pocket. Or maybe they weren't a client who was going to use a first-time buyer program before, an assistance program, but now because they're going to have to pay this extra couple percent, maybe that's a good time to introduce a program that'll help cover some of the costs for them, so they're not coming out of their pocket with all of it.
Okay, if you have any other questions, Chris will be here.
I'll stick around for a little bit, so feel free.
Yes, so we'd like to thank you for this very informative presentation. You were wonderful. You were great.
Thank you. Thank you.
And West San Gabriel would like to present you with the Certificate of Appreciation. Everybody can just stay for a few minutes so we could take a group picture, please. Thank you.